Hello, welcome to the May 2019 edition of TAXtalk. My name's Anita Monteith, I work for the ICAEW Tax faculty, and with me today we have a new guest, we have Jason Bradley. Welcome, Jason.
Thanks, Anita.
Jason is a technical advisor on the Institute's Technical Advice Helpdesk, and you deal with our inquiries. We also have today Sue Moore, who is a regular on this particular broadcast.
Hello.
Sue, you look after the Private Client Committee.
I do, yes.
And you
yes.
have your own practice.
Indeed, yes.
So you actually feel the pain of many of our practitioner members. We'll be coming to
actually at the coalface.
At the coalface. We'll be coming to that pain a bit later on. But first of all, Jason, this is your first time on TAXtalk. Can you tell us a little bit more about what the Technical Enquiries Service does?
Yeah, sure. Thanks, Anita. As I said, my name's Jason Bradley. So I work on the ICAEW's Technical Advisory Service. So what we do is we provide a service to members, so they can telephone us up or they can email, and all the sort of details are on the website numbers-wise, and we can advise on accounting, so UK GAAP and IFRS. We can also advise on company law, ethics, and all sorts of other bits and pieces as well. One of the areas we've been advising on recently is making tax digital.
Okay, well, we'll come to that. But tax generally, you don't normally take questions on tax, do you?
Not normally, no. So we don't generally advise on the tax area. What we tend to do is if people have questions on taxation, we've got a couple of different options. The first is Tax Connect, which is the ICAEW's service run with the tax faculty for sort of getting tax advice and things of that nature.
And you do need to be a member of the tax faculty to be able to use that?
Yes.
Yep. And then you select your specialism, don't you? And it pops a selection of people.
Different people you can sort of get in touch with, and they can hopefully help members out.
You
with
get 15 minutes on the phone.
Inquiries. Yeah, 15 minutes
with a specialist.
Mm-hmm.
That's great. Okay, so that's Tax Connect.
So there's that side of it, and then there is something which was until very recently known as AbiTax, but is now called Hmrc, which is a sort of telephone service, sort of similar to ours, but separately for taxation. So that's a sort of independent thing that's run there, but members can contact that and get tax advice from that side of it as well. If
so
it's something
this is the old AbiTax service, just renamed
rebranded,
Markel.
Markel,
that's
right?
The
one. Yep.
Okay, thank you. Now, you were mentioning MTD.
Yes.
You are taking tax questions on MTD.
That we are helping with, yes. So
okay.
if members are having any problems with signing up for an ASA or for linking
Agent
their
Services
clients,
account, that one? Yep.
That's the one. Or linking their clients or anything of that nature, or even if it's just general questions about making tax digital, we're advising on that and hopefully helping out. To sort of facilitate that, we've got a couple of sort of core help sheets and pieces of guidance that we've put together as well. So there's a sort of starting practical guide where we talk through some of the more basic sort of things from a making tax digital perspective. So if you're just starting to get to grips with it, that's a good starting point. We've also then produced some more detailed guidance on systems and softwares and various schemes. And we'll touch again, I think, a little bit later on some of the sort of scheme elements of it. But yeah, that's a little bit more detailed guidance just to help people out from that perspective as well.
And those help sheets are available to all ICAEW members, and they're on the ICAEW.com website,
They are, yes. So ICAEW.com website, they're also on the MTD Hub, and they're available to anyone who is an ICAEW member, so you don't have to be a tax faculty member to get those. That's available to anyone.
Excellent. And I know you're working very closely with our own Caroline Miskin.
Yep.
And recently you had a very exciting ASA sign-up day.
We did, yeah. So we had a great event with, ourselves and Caroline as well, and also Hmrc came along, which was really good. And what we're doing there is helping people sign up for their ASAs, talk them through the process and all the steps that they need as well. And that was really a successful day. It was very enjoyable to sort of meet the members. And I think people got a lot from it, and it was really good to have Hmrc there as well and sort of have a chance to ask. I think we were asking them some questions as well. It's a good opportunity to sort of, find out a few bits of key information of what's coming up and things as well.
And of course, to avoid being based in London, because we know that many of our members aren't based in London, are we, Sue?
No.
We have recorded recently 2 webinars. They're bang up to date. Caroline did one specifically for agents signing up to the Agent Services account and one for businesses to help them sign up to MTD for themselves. And those are available to all ICAEW members to view on the website. Just moving on, we've had some more interesting developments. We had the latest edition of the VAT notice for MTD, that's 700/22, published last week. And we were quite pleased to get confirmation, were we not?
Yeah, I think they're bringing in there and confirming something that I think people have been wanting for a little while and hoping for, which is the ability to record your totals from a supply statement. So as long as your supply statement, everything relates to the same VAT period and everything charged at each rate is detailed on there, it's going to be acceptable and sort of confirmed now that you will be able to just record that total from your supply statement, which I think is a really sort of positive, practical
It's a pragmatic approach, isn't
Yeah,
it?
exactly. It gets, I think as Hmrc allude to themselves in the VAT notice, it's a good way of going, we've got compliance, but we're sort of realising that perhaps it's a little bit more practical for people to do.
I think that many businesses, particularly smaller businesses that do record from supplier statements, probably already have a system in process for doing that. And of course you would be required, wouldn't you, to tick off. Sue, do you have clients that do this and you have to go through a check?
Yes, it's, a commonplace is if it's a small business and they're going to builders merchants a lot and they're buying a few bits here and a few bits there, and so they end up with a whole load of receipts, and then they're ticked off to the supplier's statement, and the supplier's statement is used, that's what they pay on as well if they've got it on credit, and so it is a much more practical way of doing it.
Yeah, and where you're using the cash basis, it all fits together nicely.
Yes.
So it's great that we finally got that actually in the VAT notice, so we can breathe a sigh of relief on that one. The other thing I just wanted to mention is the news recently that Hmrc is opening up the income tax pilot. We saw last week that they have asked for people to step forward who have furnished holiday lettings to join the pilot, and we do actually have a couple of members who were in the simple pilot for traders last year. I think this is an interesting development because, of course, many people won't have realised that income tax hasn't gone away. The government have said 2021, essentially, at the earliest, but we are still working with them, albeit not very fast, on the income tax rules and in particular the challenges for where you're using accruals rather than cash. Opening year rules came as a bit of a challenge. Anyway, so people who want to join the income tax pilot, furnished holiday lettings, now have the opportunity. If we have any members who decide to go ahead with that, do please get in touch with one of us in the tax faculty, either me, Anita Monteith at ICAEW.com, or Caroline Miskin, caroline.miskin at ICAEW.com, because we'd be very happy to work with you through the pilot journey. Now, just one last question before we leave that completely, Jason. You have had a couple of questions recently, haven't you, on retail schemes?
We have. It's been so I think part of sort of people's inquiries recently have been sort of wondering, well, are there any opportunities to sort of reduce down perhaps the amount of recording that we need to do? One of the common questions we've had is, can I use some form of retail scheme to record my gross daily takings rather than having to do it on a transaction by transaction basis? And from the VAT notice, it is clear in there that if you are using one of the retail schemes, then gross daily takings is acceptable. And so then one of the next questions that people come up to is, well, how do I get on one of these schemes? And it's VAT notice 727 has the details on it. it's not something you'd actively apply to HMRC for. It's just a matter of ensuring that you are eligible for one of the published
So you
schemes.
self-assess and then you just do it.
Yeah, and then as long as you're meeting all of those, and we'd always suggest to members document well why you think you meet the criteria and which bits of that you're happy with, so that you can always evidence that. And I think again that's a good route for people to be MTD compliant, but also make sure that they are perhaps not adding unnecessary burden if they are eligible for one of those schemes.
Great. Thank you very much. Well, let's pause on MTD for now. And Sue, you have been, as ever, working on property income. You've turned into something of a specialist on property income.
Yeah, so it's there's another consultation out. It's about the changes to principal private residence relief, shortening the period from 18 months to 9 months at the end of the period when you don't have to be present in the house and can still get the relief, and also changing lettings relief. Lettings relief has been available for if after you've left your principal private residence or before you take up occupation as a principal private residence. It can be before, and if you've let the property out, then you can get a maximum of £40,000 relief, or if it's a married couple owning it, you can get a maximum of £80,000. That's now been changed. What the consultation says is that the intention of the relief is to help out when it's shared occupation. It was never intended to be a relief when the whole of the property was rented out. But if you actually look at the legislation, it does say the whole of the house. So we're not quite sure why they think the policy was...
Goalposts moving?
Yes. So it can only be for shared occupation now, which is very confusing because if you, for example, use the renter room relief already and you've got one lodger in your house, then if you look at the capital gains tax manuals and its statement of practice 14/80, which says that if you've only got one lodger, then you don't lose your principal private residence relief anyway. So that was a separate thing to lettings relief, but we are where we are. It's a consultation on how to implement it, not whether or not they should implement it, so we're already with it. It was announced in the budget. So I'm doing the response on that, so if anybody's got anything that they want to share on that, I'd be happy to receive it. I'm sue.moore@ICAEW.com.
Thanks, Sue. I mean, I do think that this is one, PPR was, when I was lecturing, way back when, it was always one of the topics that was treated as a little bit of a wonderful exam question, because academically, adding up all those months that could count for letting relief was quite exciting. Yeah. But it was really hard for people to get their head around.
But in fact, I've found over the years that clients are pleasantly surprised to find that they've got a lettings relief. They haven't consciously gone about getting it. A lot of them didn't even know it was available. So there's not going to be outcry from the public at the loss of it because they didn't know it was there in the first place.
But on the other hand, if you are an accountant and you're advising people on tax...
Yes, and of course these changes are going to be retroactive. Yeah. So for example, if you put your house up for sale, say last October, and if you sell it in March next year, you'll get 18 months exemption. Sorry, if you moved out last October, you would get 18 months exemption at the end and you're fine. If you in fact don't manage to sell until April, then there's only 9 months exemption. So suddenly you've got 9 months, which can possibly come into charge. And not only that, property values are falling in this area. And so you might end up with a capital gains tax charge on what in reality has been a loss. So it is retroactive, and it's not very good for some people.
Yeah, and we do make all these points, of course. Sometimes they are listened to, but sometimes they're not.
Yes.
But we were talking earlier, weren't we, about best tips at the moment. I mean, clearly one tip is get on and get the thing sold if you possibly can.
Yes.
But also you had some other tips.
Yes. I mean, the biggest tip is to follow through on the promise I made to myself last January to educate my clients and perhaps bully them more so that I get the information in sooner rather than later. So that's my...
Bully rather than encourage via
I would
reduced fees.
start with encouraging. I will resort to bullying if necessary.
But it is a serious problem, isn't it?
It is, yes, and I think sometimes clients seem to get worse rather than better, and I think we make a rod for our own back because somebody perhaps is late and they're not normally late, and you pull it in and you do it for them, and they think wonderful, and then they think, oh, I can do that every year now.
Yeah, it becomes sort of a self-fulfilling prophecy.
Yes, yes. So although my engagement letter says I don't promise to do the return on time if the information is received after the end of October, it's a matter of professional pride that if I've got the information...
You want to get them done.
I want to get it. Even if the
deadline.
information doesn't come in until the 30th of January, I will still do my best. To get the return done.
And actually this is a great time to be approaching clients for this because of course they're all now getting notifications of the need to submit a tax return for
Yes, well,
next year.
I think all practices do the same. We send out the information request and I think it just goes into the client's recycling bin most of the time. And then we send it out again later in the year. And
Okay, Sue's top tip then is nag. But you did just mention engagement letters. Just segue quickly. There is a new one out, isn't there, or this year?
Yeah. So if you are looking to update your engagement letters for any sort of MTD related services that you're providing, in January this year we published on our engagement letter help sheet a new appendix, which is available on ICAEW.com, which helps members in practice when they're sort of putting engagement letters to make sure they're getting all the terms clear so that it's clear whose responsibility is what from an MTD perspective. That sometimes can be a little challenging as to who's following what through. That will also contain the updates from October last year to cover off changes because of insurance directives and a few other little tweaks as well. So
Okay. And those are tracked, aren't they?
They are, yeah. So there is you can download sort of a completely new version of it, but if you're looking to update something you created with an old version, there is a Word tracked version on there as well that you can sort of pull out and run through.
Excellent, thank you very much. You also had a comment, didn't you, about tip? A number of people had said, well, you were talking to about MTD, and they were talking about basically using it as an opportunity.
Yeah, I think there's a couple of interesting opportunities presenting from an MTD perspective. I think the first one is we've seen a few inquiries from people whom were asking us about voluntary MTD sign up. So, and the reason they were asking that essentially is what they were saying to their clients was, we spent an awful lot of money getting ready for MTD. The vast majority of our VAT clients are all going to be MTD. So the 2 or 3 people who are not needing to register, they were saying to them, well, so as part of our practice and digitisation and moving forwards, we will only deal with VAT returns through MTD, so that even if it's not something you have to do, if you want to sort of remain one of our clients, and that's something we'd like you to do, and that's how we'll carry it forward. So I think in some ways that's a good opportunity to sort of for firms to digitise a whole process there and have one process running everything through. But I think then again on the flip side of it, that leaves some people who perhaps need to find a new accountant. So I think there's definitely an opportunity there as well for people to go and do find new clients, find new blocks of clients. You see it a little bit with retiring members as well. I think some people perhaps are thinking, if I'm getting towards retirement, I'm quite close to it, is investing a huge amount of time and money into getting my practice more MTD and digital ready really worth it for me? And I think some people are probably coming to the conclusion that might perhaps not be for them. So again, I think an opportunity for other practices to look for blocks of clients and fees that perhaps they can help accountants that are looking to retire sort of take over those clients and get them MTD ready and more digitised over time.
Okay. And of course another very good reason for registering for MTD voluntarily is that then you don't have to keep checking every single month to make sure you haven't gone over the 85,000 threshold.
Exactly.
Which would mean a rapid purchase of software
Yeah,
and switch of system. Sue, do you accept clients from all bookkeeping products, or do you try and restrict?
I don't do trade.
Why did I ask that?
As most of my clients, I deal with private client work rather than business clients. So I do have some, one or two companies which either have been lifestyle companies or just by accident I've ended up with them. And yes, sadly, there's 2 or 3 different accounting software things coming into my practice. So I've now decided that anybody else, they've got to be on the one that I'm working on.
Yeah, so you choose and
yes,
you say, this
yes,
is my bookkeeping product choice.
Yes, and the reason I chose the one that I did is because it will fit in well for rental accounts, because that's when a lot of my clients will come into MTD because of the nature of client that they are. I've got a lot of clients with rental properties. And so they will ultimately have to come into the MTD sooner rather than later, if you like. And so I chose a software package that suited that. So I think choosing which one suits your own type of practice and trying to encourage clients to have that one.
Yes, and I would also point people to the guide we have on the .com website,
yes,
which is to help you choose things to consider when choosing software, and that's been written by Mark Taylor, one of
yes,
our IT faculty colleagues here. So again, that is available from the ICAEW.com/MTD hub, and everything that we've been talking about is freely available to all ICAEW members, although of course we do want you to join the tax faculty. Moving on, we had some other points that we just wanted to talk about quickly. The 5th Money Laundering Directive, Sue. Back to you again. I know this is close to your heart.
Trust registration service are words that strike fear into the hearts of many practitioners. The Trust Registration Service was introduced to comply with the 4th Money Laundering Directive. We're now moving on to the 5th one, which will be in place next year. And so the Trust Registration Service, it's going to change. Hmrc are already working on a different form of software for it, because under the 4th Money Laundering Directive, it was only trusts with a tax consequence that had to register. Whereas with the 5th Money Laundering Directive, it's all express trusts. And so that's going to widen the scope enormously. There's a consultation about how to implement the 5th Money Laundering Directive out at the moment. So again, if you'd like to make comments on that, please let me have them. And also later this year, we're going to get a technical consultation specifically on trusts and the Trust Registration Service and the 5th Money Laundering Directive. So that will be even more to do with trusts. And I just hope that it's going to be better than last time. I don't think it could be worse than last time. That's all I can say.
Well, I'm sure you've got your committee
yes.
on
but
this.
I've done an article which is available in the June tax line about the 5th Money Laundering Directive, so all the tax faculty members will get that shortly. So,
do you see this reaching a lot more of our members than the first one did?
Yes, because if it's an express trust, so you might have clients that have set up a trust and there's nothing in it, but they've set it up ready just in case. A lot of clients do that. I don't know
do
why.
Do they ask
first? Generally not, no. So you might find, that clients have got these trusts sitting there, the ABC trust, the DEFG trust and what have you, and they're going to have to be registered if they're express trusts. Even if there's nothing in them. And the amount of information that you have to provide, it's very far-reaching. Hmrc, basically in the consultation, have admitted that it was gold-plated last time, and they are not minded to do the same again this time. But they will ask for more information on those trusts with a tax consequence than on those without. But I think that's more to do with actually identifying people better if there's a tax consequence. So wanting the national insurance numbers for beneficiaries and so on. But it's not going to be a public register, which is what initially the EU had wanted. So yes.
So this will require people to set up an agent services account who perhaps haven't had to do one so far.
Yes.
In order to
access
do
the trust registration.
That's been a few people when signing up for their MTD one, I think, hadn't realised perhaps that they already had one.
Yes.
Certainly came across a few people who hadn't quite realised that they are the same.
Right.
They are the same account. So some people I think were trying to create one because you've already got one. If you've already done one for the trust registration service, it'll still follow through and it'll be the same account going forwards.
Could you accidentally have set up twice?
That's a good question. I presume the system would prevent you from doing so.
I would hope so.
I don't think it would let you, because if you can't, if you don't actually have the same address as Hmrc have got for you, it won't let you open the agent service account. So there's only one address for each agent, and I don't think the system would allow a duplication.
Okay. Well, let's hope that that is indeed the case.
I always live in hope that it works.
Well, I'm sure somebody will tell us.
I think we'll find out if it doesn't, yeah.
Great. 2 volunteers here. If you've got that problem, give them an email. Okay, well, let's just finish off with a few bits and pieces that have been coming across our desk. We had a wonderful moment, didn't we, Sue, earlier this month, when we were just chatting to actually a very knowledgeable and reliable tax person who expressed surprise when we were talking about that old favourite, the high income child benefit charge, and we mentioned that you needed to sign up for child benefit and then tick the box to say you didn't want the money in order to get your
yes,
insurance
I had
credit.
to give this advice quite recently to my daughter, whose daughter is almost 12 months old now, and I said, you need to apply for the child benefit. Oh, she said, but don't we earn over the limit? And I said, well, yes, you do, but you need to keep your pension credit going. So yes, it's something a lot of people don't realise. And also, I think it's always worth asking each year your clients, when you get the information, have you been claiming child benefit? Because
have you had a baby, I think would be a good one.
I would usually know that. But I have found clients who, despite having been asked this question for 2 or 3 years, and they say no, and then suddenly I get the letter from Hmrc saying that they've revised the tax computation, and it's because they've been claiming child benefits. So it is worth always asking again and again.
Well, and they don't always know, of course, because to be fair, it may be one partner that's claiming the child benefit and the other one may have the higher income, which is creating the charge. So, but the important thing is to make sure they're claiming it and they're not taking the money if necessary.
To get the pension.
So they get the pension credit.
Yes.
And it's worth remembering also that then lasts for a 12-year period. And at the
well, until the youngest child is 12.
Okay.
So it could be longer than 12 years.
Now, actually, that's interesting. Is it just until the youngest child is 12, or
yes,
do you
because
have
you're still
to claim
claiming
again?
No, I think because I think your claim's in there, and that's it.
And that's it. That's all you have to do.
I think
okay.
so. Yeah.
Note to self: check the form. But
yes,
obviously not for me. My children are considerably older than 12. But look at the wording. The other point that comes up quite often is IHT and will planning.
Yes.
Fed up the clients that haven't made a will still.
Yes, and also doing power of attorney. People think, that powers of attorney are just for end of life. They're not. I have powers of attorney for my children, for if they, when they went off travelling. I've still got it, even though they're all now married. But it was for when they were younger. I did the power of attorney. Yes, my husband and I have each got powers of attorney in place, just in case, you don't know.
We have to, actually.
Yes, and I think that's important, and it's something to mention to clients. And it's easy enough for the clients to do it themselves online. You can just give them the link to the website. And but will planning and inheritance tax planning, you were talking about business opportunities earlier with the MTD and so on. I think that if you're up to speed on inheritance tax, this is a very good area to give good value to clients and to earn good fees for yourself. And of course now you can register to do probate through the Institute. And I think probate's an area that you answer questions on.
It is,
isn't
yeah.
it?
So from the ethics side of our technical advisory service, we can help with probate questions. So yeah, if anybody does sign up to become a licensed probate practitioner and needs some guidance or help, we can always help with that side of things as well. Because it's a new evolving area, and I think it's a great opportunity for people. I think to offer something slightly different to clients, perhaps, that they won't get at every accountancy practice.
Yeah.
And I think the thing is, a lot of people think that they have to go to a solicitor. And the first thing that the solicitor does is write to the accountant to say, can I have a copy of the tax return? And what can you tell me about what the client's got?
Yes.
So just cut out the middleman and go straight to the accountant if they're... And so, yes, it's to set yourself up, become a registered probate practitioner. It's good, yes.
Yeah. And just a reminder, of course, if you get married, as you did last week,
As I
Jason,
did, yeah.
congratulations.
Thank you very much.
But you'll have to redo your will now, because
will,
the old
yeah, I
one will
will.
be invalid.
Yeah.
So again, that's another opportunity, isn't
Yes.
it? For
And another really big opportunity is it doesn't work the other way. If you get divorced, your will still stands.
very good practical point.
So yeah, so
Is it divorce or is it just separate in
whatever.
circumstances?
But your will still
Yeah.
stands. And so yes, it's.
Yes, of course. Sorry. Yes, no, these things I think give us opportunities just to remind clients that we are there all the time, not just once a year for the tax return panic. I think that probably is all we have time for this month, but I would just like to point people to the direction of the website where you can sign up for the Tax Faculty Conference, which is on the 5th of July. We're all going to be there. We are going to be talking about some more practical points, aren't we, Sue?
Yep.
You're going to keep your really, really best practical points to announce at the conference. We have a full series of webinars. If you are a member of the tax faculty, they are all freely available to you. We also have a series of tax bites, which are a new product, which are mini webinars that last about 5 to 10 minutes, and those are available to all ICAEW members. All that remains is for me to say thank you very much indeed to both my guests today, Sue Moore and Jason Bradley, and we hope you'll join us in June for our next Tax Talk. Thank you very much.
Thank you.
Thanks.